Let's look at the broader markets across the globe. September is probably a seminal event where Wall Street will see rate cuts happening after maybe 4 years or so. How do you see this panning out in India? Should we be following suit? And if yes, when do you expect the first rate cut to come in?
So first thing is that it's quite possible that Fed moves by some amount, maybe 25 basis points or so. That is what it has indicated, that it will try and cut interest rates. Domestically, I think India and many other emerging market central banks have been waiting for Fed to move first and then embark on a rate cut cycle. And when you look at the domestic numbers, our core inflation is at 3.25%, which is almost a 30-40 year low, right? And barring, let's say, food inflation, which is slightly more volatile, inflation doesn't seem to be a problem. Government borrowing is also not a problem because government is now borrowing lesser than what it was doing last year or year prior to that. Third is that our balance of payment is also very stable, so we don't have any external shock coming up as of now. So I think RBI has some elbow room to cut interest rates, but how large the rate cuts will be decided by why the rate cuts will happen. So if the Fed cuts rates by 25 bips or 50 basis points, I don't think it will be material because markets have already moved up in anticipation that rates will be cut. Financial conditions have already eased in US. So I think it could most likely be a non-event unless the rate cuts are very big, that over a 1 year period you see 200 basis points rate cut, which to my mind cannot happen without a crisis, right? So the most important question that comes to my mind is why will the rates be cut? I think that is the question that only we will know only in future. And if the answer is because of a crisis, then I don't think it will be good for equities. But if you have some mundane 1 or 2 rate cuts, I don't think they will make any material difference.